We are live already.
Perfect. Hello, everyone. Welcome back on VCTV, which is the Venture Capital TV, and it's from La Token, as you can see. And today we're going to discuss about microlending, background checking, digital credit cards. So what does that mean? Let's just define that into two segments for this session today. We have speakers who have experienced in terms of investments in the space. So before I start introducing my speakers for the session, I'd like to introduce myself. My name is Sunny Mohanty. I'm the Regional Director of La Token, based here in Singapore, and I host VCTV, which is a venture capital TV, Monday to Friday, 8 p.m. Singapore, fixed time. So yeah, welcome back, guys. I mean, I'm really excited because micro lending itself, microfinance, micro lending has been a buzzword last year, including other stuff like fintech, health tech, So we would like to know from our speakers what happened in the space in year 2020. What were the challenges in terms of KYCing, like background checks, with a lot of fraudulent transactions, with a lot of fraud happening last year, especially when the whole world moved to a digital platform. We were all working from home, because of the pandemic. A lot of fraud happened in the past. So importance of background checking, background screening, a lot of payments using cards that were made. So what are the challenges? What are the trends? How much money got pumped into in developing that space? What technologies were used to enhance the usability of those features? I'm going to discuss all that in today's episode of VCTV. So today we have speakers from India and Dubai. And let's start with some introduction and background. I would like to start with Tushar. Hi, Tushar. Welcome back on VCTV. How are you today?
Hi, Sunny. I'm very well. It's my, I think, third or fourth month on VCTV. And, I always look forward to coming, and especially when you are the moderator, and it's amazing. So I'll give you a brief background about myself. I have more than 2 decades of experience in investment and financing space. I've worked for companies like Deloitte and Touche, where I was at the private equity practice. Also, Brand Capital, which is the India media house, Times of India's venture capital arm. I've also handled $2.5 billion of debt and raised that amount for the Russian company Systema's India unit, MTS India. And I was CFO of a company owned by Guggenheim Partners called DLI. In the last 6 years, I managed two companies. One is Consultancy Ventures and the other one is Saffron First. Consultancy Ventures advises companies on venture capital, private equity, angel investment, debt, and mergers and acquisitions. And Saffron First is an angel network and fund. So we invest across tech companies.
Awesome. And welcome back, Tushar. And lovely to hear those words from you. So, by the way, I just wanted to tell our audience and speakers that we are live streaming not only from YouTube, but also from Facebook, Twitter, and Instagram. So you can watch us everywhere, all the social media channels that we have. So we're live streaming right now as we speak. So fantastic, Tushar. Next, I have Harsh. Hi, Harsh. Welcome back. How are you? Harsh, we can't hear you. No.
Mute, Harsh.
Okay, I'll come back to you, Harsh, while you fix your technical issues. We have Karthik from Dubai. Hi, Karthik. Welcome back. How are you today?
Thank you so much. I'm doing good and lovely seeing you guys once again. Episode number 51, Sunny. It should have been
Wow,
52, but 51 today, and I am excited about it. I represent a couple of family offices based in the UK, primarily investing into health tech, fintech, and edutech. I also represent a startup fund based out of Middle East, a VC house that invests primarily into green tech. We just did an investment this morning and into a lot of robotics and artificial intelligence. And I'm interested in this space primarily because we've had certain investments coming out of India. At the moment, we have a little bit on micro lending and a little bit on cybersecurity coming our way. So yeah, this is one space there where evolution seen or the space has seen a lot of evolution. And while I wouldn't call it a sunrise sector, there's still a lot of growth opportunities for small and large businesses to be a part, especially the large established banking houses.
Oh, of course. Thank you, Karthik, for that. Now I think we have Harsh back. Harsh, welcome
Yeah,
back.
yeah. Am I
Yeah,
audible
yeah.
now?
Yes, you are audible right
Yeah,
now.
awesome, awesome, awesome. Glad to be back here at VCTV. Love these great discussions that we have with VCs across the world. So, brief bio about myself. I'm Harsh Shetia. I'm working with our ventures as a venture partner. We've done 50 investments over the last few years. Across we are sector agnostic. I personally have an extensive background with health tech and fintech, and I used to work with Paytm as a regional sales manager several years back. So I'd be able to add a lot of input to the fintech space, which is the topic of the discussion today. So I really see a lot of opportunities in alternative lending formats in the fintech space, and that is where I think we can really make some new improvements as startups. So looking forward to see some interesting startups in that space.
Fantastic. And welcome back, Harsh, as well. And thank you so much for sharing those, introduction with our speaker, with other speakers and the audience as well. The global micro lending market size was valued 134 billion in 2019 and is projected to reach 343 billion by 2027. Um, from 2020 to 2027. Micro lending is a way, obviously, just to give you a perspective, to provide small businesses, individuals with capital to help them manage their businesses financially. Micro lending is an important aspect of various emerging countries as it provides access to capital to the financially underserved, such as those who are unable to get checking accounts, lines of credits, or loans from traditional banks. So furthermore, government of various emerging countries are introducing favorable policy for microlending upsurging the economy. So let's just start our session, this episode with microlending from an India perspective. Then we move to other areas like the credit card payments, digital payments that were done, and background checking or the KYC, you can say that. I'd like to start with Tushar. Let's start with some opening remarks on micro lending, microfinancing. Thank you.
Thank you, Sunny. So micro lending came into prominence around 25 years back because as the structure of lending has been in India, it is always backed by collateral to cover the risk inherent in lending. So usually you have to typically give a real estate, a property, a corporate guarantee, or a personal guarantee, some sort of a guarantee to get loans. Now the problem is a huge population which is below the poverty line, and their incomes are not permanent. Sometimes their addresses are also not properly fixed, and their loan requirement is typically less than $100. It becomes financially unviable to lend to this slice of the needy, and that's why typically traditional lenders which have been active in this space have been charging very high rate of interest, almost a usury kind of rate of interest. And that's when microlending came with SKS Microfinance by Vikram Akula in 1997. And it pioneered a whole, it was around 2007, I'm sorry. And it pioneered a whole line of microfinance institutions. In the early part, even these microfinance institutions were not allowed to take deposits also. So they had to they had to take financing from traditional banks and then lend them at high interest rates. Another challenge was distribution. When you are lending out small amounts, how do you make money off it? Because you have to, distribute the loan amount across a large population. So a lot of these factors have now been fixed. We have innovative solutions like each microfinance done is backed by a personal guarantee of the whole family and friends. Sometimes up to 30 people are guaranteeing that particular loan. And we have in India itself, almost it's a $35 billion sector as of now. And around 3,000 microfinance institutions are active as of now. And even the rate of interest has reached less than 20% in some cases, from as high as 37 to 74%, which was some years back.
Wow. Right. So this, if I understand, this sector has a lot of potential, but not really much was happening in the space. So yeah, thank you, Tushar, for those opening remarks. Next, move to Kartik.
Yeah, so I relate to microfinance very differently, and I see what subprime lending did to the world in early 2000, 2007, 8 were cataclysmic for all of us because of subprime lending that went out of control. So subprime lending, while it has been a mainstream lending below the line, as we call it, it hasn't picked up primarily because of multiple reasons. One of them is obviously the distribution, but second is about uniformity of credit scoring. What CIBIL does in India or what Etihad Credit Bureau does in the Middle East is to create scoring patterns to ensure that people with certain credit worthiness are scored on anything between 6 to 24 parameters. Percolating below the line into certain social strata is fine. It's impossible to do, especially in certain geographies like subcontinent India, Pakistan, or maybe developing countries. And hence, building a reach is not only the challenge, but more importantly, the delinquency and the non-performing assets is a massive problem. So while businesses charge anywhere up between 35 to 40%, sometimes going up to 60%, which is a 3.5% more than the credit card coverage, almost all of them have challenges of 35 to 50% portfolio delinquencies, which necessarily means over a period of time, they either need to have harsh collection rules or the delinquent enough to be bought by a securitized partner, and then it goes into liquidation. Successes in microfinances have come in certain sectors. There are companies based in Myanmar, there are companies based in certain parts of Africa, and there are companies based in Pakistan, pardon me, which have built a technology-based medium on microfinance. So necessarily, if you're funded, for example, $100, and the ticket sizes are significantly smaller, that
Yeah.
currency doesn't necessarily come to in one go. It comes to you in a virtual manner, which means it either comes to you as a virtual currency or it is currency paid off to fulfill a certain obligation or a task. And then instead of a monthly collection, it's a daily collection attributed through an app wherein funds need to be deposited and funds are siphoned off into a particular escrow account to make sure delinquencies are controlled. Anything which is controlled on a larger scale with intermediaries and third parties coming in have seen a success. Anything which is credit card based or anything which is a digital lending based have seen successes. Old school microfinancing, which is person to person financing or organization to person or family to family financing, has not seen that kind of success. Bangladesh tried it for a very long time, but 7 to 8 family houses or family offices that lent upwards of $1 billion had to fold up the businesses with almost 62% delinquency in their portfolios. So microfinance is here to stay, Sunny. Microfinance will metamorphose into a technologically robust medium. There are
Yeah.
also credit bureaus and credit history ratings that are being built for people with repayment histories to move from your micro lending and your subprime lending into your premium and prime lending. But that
Right.
is a journey that the banking sector needs to advise, the banking sector needs to accept. Most of the banks have what banks thought was a quick route to make money at 35 to 50% interest rates. They have now started shying away from this idea because not only governments are looking at it very differently, but
Right.
they are noticing that their portfolios are getting delinquent and their portfolios, the quality of the portfolio is deteriorating on a regular basis, which is not scalable for them.
Right.
Until unless there is either a regulatory or a banking support coming into it, the sector will suffer, but technology will be able to take it to the next level.
Right. Okay, great. I mean, good to know about all those insights about micro lending coming from Kartik. Very good. Thank you, Kartik. Next I have Harsh. So Harsh, let's talk about short-term lending as well, including micro lending and microfinance. Over to you, Harsh.
Sure.
Can you?
So I have slightly different Can you hear me now?
Yeah. Can you be little louder?
Yeah, sure. So I have a slightly different take than Karthik. Obviously, he mentioned regarding the risk of delinquencies, right? However, I kind of feel that having a traditional CIBIL or any other rating structure in microlending won't actually
Mm,
help because these people don't have a credit rating history, right? So we need to come up with some more slightly different, slightly more innovative rating criteria to get a better understanding of their credit worthiness instead of sticking to the conventional banking structures and trying to implement that on the smaller scale because the universe of microlending is completely different than conventional banking, right? So we need to identify what we can do unique over there, how we can justify the rating criteria for the small ticket transactions, and how we can facilitate that, right? We've already seen some pivotal business models in that case. For example, apart from SKS, there are other microfinance companies as well, right? So what they do is they're not just lending providers, but they're overall holistic business partners as well. In that they partner with established companies, and they what they do is they provide not only loans, they also provide revenue generation opportunities for these businesses. And these loans act as not only collaterals, but they even have to take these loans to run these businesses. And then based on the revenue that they're generating, they use that money to pay back the loans. So these are the kind of innovative things which the microfinance kind of has created, and that really helps in terms of making this model sustainable. I know a couple of my friends working in these microfinance companies, and they've primarily relied on these kind of partnerships to ensure that the delinquency rate is slightly higher. So that is exactly highlighting the fact that conventional lending won't work with these microfinance entities. You need to have a more hands-on, a more thorough business partnership with them rather than just a conventional microfinance. Recently, around 3-4 years back, in
yeah.
RBI had given approval for a payments bank concept as well. So even this payment bank is a good concept to help penetrate and give them access to the banks where the accounts are of a very small size, like 1 lakh rupees, which you can deposit at max within those accounts, and you can still access all the facilities of a bank without having too much savings and without having a restriction of having to put 10,000 rupees in a bank, right? So even this
Yeah.
payment bank has given them a lot of flexibility in terms of accessing banking facilities to the more poor people across India. So this is how I see the entire structure changing dynamically, and we need to come up with such unique and such differentiated offerings rather than thinking of how we can apply conventional banks to this target audience.
Great points, Harsh. That brings to my next question. How has this ecosystem is developing in the so with that, I like to know ask you some positive changes in recent times. I'll start with Tushar. So we'd like to know if you couldn't understand my question, how so obviously we hear some challenges when it comes to micro lending and microfinance. So we'd like to know any recent changes, any critical recent changes that you can share, including how this ecosystem
Sunny,
developing. Yes.
yeah, Sunny, very good question, Sunny. I mean, so a big change has happened since 2014, 15. The government of India, it implemented a trinity called JAM, which is Jandhan accounts, Aadhaar, and then mobile banking. So, I'll give you how things have changed, from a macro perspective. 400 million bank accounts were opened in the last 6 years. These were zero balance accounts, and typically what it means is that the bottom of the pyramid population here in India is practically all of them have bank accounts. Secondly, through these bank accounts, they can avail facilities like insurance, they can avail a little bit of loans and stuff. Secondly, a digital biometric enabled card called Aadhaar was issued to the entire population. Now, almost the entire population in India has their biometrics saved in Aadhaar. If every one of them have a unique ID, which is called UID, and the card is called Aadhaar. Thirdly, Reliance, came up with a telecom company called Geo, which brought down the rate of data on mobiles by 90%, almost more than 90%.
Right.
And that exploded the use of data in the country and the usage of smartphones as compared to feature phones. With these three factors, with the jam trinity coming into the picture, the fintech scenario, the lending scenario, the credit scenario, it boomed. And now we have very sophisticated fintech companies. Like there is a company which I consult for. They lend to less than 100,000 rupees, which is a small amount, and they recover it by the use of payments on the bank accounts by the payment companies, which come every day. So those kind of structures have come. Typically on the microfinance side, uh, 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 I also have seen that apart from microfinance credit, micro insurance, micro services, and people are receiving their subsidies from the government in their bank accounts. So all these factors have changed the scenario, and there are 3,000 microfinance institutions as of now. Many of them are government licensed non-banking financial companies, which can also take deposits. And that's why the rate of interest has, even come down below 20%. Having said that, the fact that KYC, know your customer, the fact that there is a lot of distribution required, the fact that there are large NPAs, non-performing accounts in this sector, all these are realities. But let me point out, Grameen Bank in Bangladesh,
Right.
this bank pioneered microfinance lending in Bangladesh, and the guy who opened it, Yunus Muhammad, he won a Nobel Peace Prize for his efforts in microlending. So and there is a lot of impact money floating around in the sector. I mean, we have a lot of impact funds who give equity funding for impact based sectors, and microfinance qualifies for this kind of funding. So I am very optimistic in this sector.
You're very bullish about it. I can see that. Tushar, thank you so much for sharing those stories with us. Karthik, same, I'd like to know, I mean, obviously excluding the region, that MENA region, outside of that region, how is this ecosystem evolving? How do you see it?
So microfinance exists in multiple geographies. What used to be a developing market or an underdeveloped market scenario was only about people who couldn't access finance. And that is why the microfinance or STPL, short-term personal loans, came, which was non-securitized personal loan. But microfinance exists in a very different manner in the Western world, which is what we call the peer-to-peer finance, or an app-based funding, which means it's a crowdfunding aggregate siphoned through an aggregator. I want to fund, I have dollars available, I want to fund. So I lend that money to an app. An app gives me a particular return. The app becomes the medium, and it releases out or rents, gives that money to somebody else. Obviously, there are banking regulations that come in. And in between, the app or the microfinance institution makes anywhere between 8.5 to 12% coverage, and then risks the portfolio, obviously. More importantly, there have been periodic creditization of microfinance, which is what's happening, which means the moment your pay cycle begins, you can, if you need to oversubscribe or overdraft your pay cycle. There are a lot of apps, primarily Empower, Dwight, Draft, Blue Dollars, etc., which allow you to overdraw your salary to a particular amount, and then you define it in the next 6 months, 12 months, 18 months. You need to clear that amount. It automatically goes in through your social security funding. So what it does is, while you might have all your documentation, you might not have accessibility to fund, it makes that fund accessible to you, obviously at a significantly higher rate of interest. Those geographies, it works primarily because the credit lending and the recovery system is robust enough. In subcontinent or as in underdeveloped or developing markets, the challenge is only about collections. I was recently reading and discussing with somebody in Pakistan. Google, what it did in India, has done similar things in Pakistan. 18 micro lending platforms that existed in Pakistan had gone on to social media defaming and social media shaming, to a level where people had to resort to suicide and run away from their businesses, had to be pulled down from Google Play Store. So app-based lending is working significantly. Cybersecurity has been pulled very strongly around it. When we move on to the next section of screening or background checking, what comes into either your national insurance registry, or what comes into your social security, or what comes into your PIC registries, has been made available and accessible to these micro lending organizations to make sure credit flow is controlled.
Right. Fantastic insights, Karthik. Thank you so much for sharing those. Harsh, over to you to discuss the same insights, please. I mean, coming from you.
Sure. So apart from the few facts which have already been covered, right, I would like to point out the biggest innovation which happened was the NPCI development, right? NPCI created the unique payment system where you can actually have 0% transaction fee in each and every transaction, right? That was the biggest reason why online transactions really picked up quickly. So we had these cards which were created. Just I'm slipping on the name right now, but these unique cards were there. With the help of that, the transaction fee which we typically pay to Visa and Mastercard normally tends to be around 0.5 to 0.75%. On top of that, the banks add their own fees. The typical MDR tends to be around 1.5% for debit cards and around 1.75 to for credit cards, right? With the help of these cards, you could
Yeah,
now it was virtually free. The transactions were virtually free, and they were operating at a flat rate for
right.
completely flat rate, right? So that was one of the major reasons why it really picked up really well, why the digital payment system really worked well. So now, if you take this innovation and you apply it into the micro lending format, right, you have a
Mm,
very interesting concept over there, where if you're looking at very razor thin interest margins, right, you combine those razor thin interest margins with this solution over here, and then the benefit is that it becomes slightly more sustainable even for the lenders in the longer run, right? Right now, what happens is the lenders, they charge around 2 to 3% interest on a monthly basis for all of these micro lending platforms. You combine that with the payment fee of 1.5% for each and every transaction, it becomes very difficult to survive. Now, with the help of reduction in those payment charges, it can even become lesser than that, and they can bring down the interest rate to 1.5%, and that can become a real good innovation to offer lending on a larger system for the customers. Additionally, originally India, because of the facts which Karthik was pointing out, P2P lending was originally banned in India. So a few companies which originally started P2P lending, they had to kind of shut down the business completely. But now again, in the recent memo, RBI has kind of opened P2P lending as well, and now I'm actually seeing some startups working in that space as of right now to drive the business of P2P lending again. So that is
oh,
also going to be taking up really, yeah.
is
That's
it
also going to be.
regulated now? Is it a regulated space now?
They are still building
Yeah.
the regulations around it, but at least they've now opened it. They've opened
Okay.
it well. Regulations are still under draft, just like crypto. Initially, the government had also banned crypto, but now they opened it again. So that's how you're seeing the crypto resurgence in India, and that is why the Bitcoin has suddenly kind of zoomed up. I think India has a big role to play in that. So same thing is happening with the P2P space as well, and I
Definitely,
definitely
India
see.
does have a big role to play, is considering the size of the country. Yes, please carry on.
Absolutely,
Sorry.
absolutely.
Yeah.
So, and the same thing I see in the P2P space as well. Now that RBI is kind of trying to get it under the purview and put some regulations in place, the next 2 to 3 years would be very interesting in the P2P lending space.
So, can you just tell me who are the service providers in the micro lending space, and who are the competitors to these startups, the big competitors?
So the micro lending space mostly are the microfinance companies like SKS is there. There are a few others are there. Fino is there. They are the micro lending players, right? The startups I won't be able to name right now because they're at a much early stage. So I would not get into naming them right now. But these are the companies who can really give them a solid challenge in the P2P space. Because these
Hmm.
guys, they are operating in the same range as those because the ticket size is very similar. All that they have to do is extend the range of offering, you know, limit them, not limit them just to micro lending, but also
Right.
expand to the other range of offerings as well. That is where they'll be truly able to compete with the SKSs and the Finos of the world.
Okay, great. Thank you so much. So we just spoken about micro lending, microfinance. So let's move to the next segment, which is about digital credit cards. Then we move to the next, which touch base on fintech, banking, and KYC. Tushar, what's the importance of digital credit cards? So just explain what's a digital credit card, by the way.
Digital credit card is a virtual credit card which appears on your app, but it doesn't have a physical copy, and that particular number of the card can be used to make transactions. It works just as a normal credit card, but you don't have actually a card in hand, and it is important uh, because that allows you contactless transactions as compared to in pandemic time, holding credit card, giving it to the other person, it exchanging hands and stuff like that.
Right. So what happened in 2020 in terms of investments and the startups in that
I've
space?
seen a number of companies. I mean, I've seen a company which has done away with the use of a card reader. I mean, they have an app. You just show the credit card to the app. It'll scan it, and the transaction will happen. You don't need a credit swipe reader. Similarly, if you look at Amazon, what it is doing across its malls, all the transactions can be done on a contactless way. And as Harsh said, the UPI ID, United Payments Interface ID in India, which is an email kind of ID for your bank account, you can just use that to make transactions. If I need to send some money to Sunny like you, I just have your ID with me. I just put it on my app and the transaction happens. So, it is very seamless. It is contactless. You don't have to remember long banking account numbers and, IFSC codes and SWIFT codes. It just works as a simple email ID. So all this has exploded and, there are also companies who are trying to create a single platform. So, instead of having separate interfaces for banking, for payment gateways, for retailers, they say that we will create platforms, and many startups which come to me are actually working to create that.
Do you also have this facility to use somebody's mobile number and make the payment?
Yeah. So that's what has also been accomplished with the use of UPI ID. So actually, when you have your mobile phone, you create your UPI ID, which is sort of an email ID. So because you have that particular mobile phone number, so you just use that number at the rate bank's name, and that becomes your ID. So it becomes very easy to use. I know Sunny's number. I'll take your mobile number at the rate and your bank name. I'll just send money across. So, it becomes that much more simple. Just as what WhatsApp did to chat, linked it to your mobile number. So the same has happened with UPI.
Very thanks for sharing, because I also face the same thing, when I was in at shops, and sometimes they don't accept cards, but they do accept this phone banking, you give your number and you transfer money using an app.
Right.
So thank you so much, Tushar. Karthik, over to you. The same question: digital credit cards. I mean, obviously, a lot has happened.
It's big. It's big in the Middle East, and it's only getting bigger and bigger. So
Absolutely.
many years ago, credit cards faced the challenge of cybersecurity. They were the first ones to be hacked when credit cards were replicated. So then came the OTP, then came the two-factor authorization, but all of it could be hacked. Today, dual SIM cards are making OTPs also virtually hackable. And hence came in virtual secondary payment methods. We call them secondary payment methods, which is primarily about creating a window. PayPal was the first to get into this space, where it created a virtual payment mechanism away from your credit card, delinking your card from your merchant, making sure that you'd never be trespassed. It created very strong security firewalls. Then came banks, which created virtual credit cards. Then we moved on to Apple and Samsung, which created Apple Pay and Samsung Pay, which de-risked your credit card completely from your payment mechanism. And now what Tushar says is what's happening. Mobile phones and telecom companies have integrated payment gateways even on the bills, which necessarily means I have credit from my telecom operator to spend up to 50,000 dirhams on my phone, which means I can use my mobile number and pay, and my telecom operator bills me at the end of the month. But necessarily, what is all of this has come in is only because of cybersecurity as one of the reasons. Contactlessness is a very recent phenomenon. It only came in because of COVID, but the primary challenge was about duplication and cybersecurity. A lot of investments are happening into improving the product delivery, which means creating virtual credit cards or making virtual credit cards accessible. Used to be a app based. Now banks don't necessarily work on this, but Visa and Master have utilized their own particular networks and identified partners, be it PayPal in certain parts of the country, be Square in certain parts of the country, be Barclays network on certain part of the world, to make sure that these partners create payment mechanisms or payment windows through which Visa trespasses and make sure that the transactions securitize. So there's a lot of development and investments coming into this. We've been talking to a few partners at Mashrek and ENBD in this part of the world who work as technology business partners for them to create securitized vaults in which this payment transaction happens. It's a 7-second window in which the payment needs to be authorized on a virtual credit card. Otherwise, the credit card number becomes delinquent and not relevant. So that 7 seconds window is where the payment partner needs to integrate technology, mobile device or bandwidth, the merchant partner, and the web interface. Now that pace is where all the development is happening, and you would be surprised to see the quantum of Indian fintech startup, Singapore fintech startups coming into this place. It requires support and blessings from Visa and Master. Not a very expensive space to be, but it requires ingenious tech development. So it's a pure tech space that we are talking about. Lot of investments coming in. Again, the boys leading this place is PayPal. PayPal's already moved. PayPal's moved from credit card virtually to credit card and credit authorizations on your email ID. Working with Google, what Google Pay did is what PayPal is leveraging on, and it's bringing in certain credit histories from certain parts of the world to make sure that even if you do not have certain funds in your PayPal account, you would be allowed to overdraft through your credit history. So there's a lot of development in this space. Middle East has seen a lot of action here. And what Beam was a year and a half or two ago is what PayPal's innovation has been. Obviously, it comes at a cost, but then people are willing to pay that cost to make sure that the cards are not duplicated.
Absolutely, absolutely. Fantastic. Good to hear that, Karthik. Thank you so much. Harsh, over to you with your insights, please. I mean, lots happening in this space. It's a crowded space, but still, we'll have to know. As Karthik said, it's not everybody's cup of tea. So, Harsh, over to you.
Could you help me with the question again?
So, digital credit cards. So, what happened? What's the trends for 2020, and how much investments went into the space in terms of startups?
Got it. So digital credit cards in India, they are called wallets these days, right? So you already have lots of wallets which are doing very well. PayPal was the original pioneer, but ever since first demonetization back in 2016, and now you look at this, it has really increased the rate of how people are transacting to these digital wallets. The biggest beneficiaries right now were Paytm and Google Pay, right? People were just ramping up their transactions on Paytm and Google Pay because of the ease of use of these digital credit cards, right? However, the next step I see for this is that if you have a credit card, right, most cards are fixed with a fixed customer number and a fixed CVV number, right? How about you have those dynamically generate each and every time during each and every fresh transaction, right? Because what happens is with the current cards, that the way that they're structured right now, even the wallets for that matter, they're open to a lot of cybersecurity risks, right? So if you have these dynamically generating, not just a one OTP is like a one-way confirmation, right? If you have a two-way confirmation or maybe even a three-way confirmation, something of that generated dynamically, that is where I see the future is going to be, because the way at which the fintech space is growing right now, you need to have dual or even triple layers of security added to it compared to a single just one-sided OTP. Right now, what has happened is in India, particularly even a company, I'm not sure it's that famous, but in India, it is very well known among the retailers, BharatPay. BharatPay is doing phenomenally well because they've done a QR code based payment system. But with that single QR code, you can use all the wallet players which are available right now, right? You can use Paytm, you can use Google Pay, you can use Freecharge, doesn't matter which other payment providers, you can use all of that, right? They recently raised around 100 CR of debt funding right now, because that is how much they've scaled during the COVID period right now. So what they are doing, that they are using that money to get into the lending space for small retailers. So these small retailers, they require 1 lakh, 2 lakh, 5 lakh rupees, which in traditional sense may not be considered micro lending, but is in a form of small term lending for 3 months, 6 months duration, right? That's what they're kind of getting into. So that is where I see a lot of progress happening in terms of innovative forms of payment structure, not just in virtual credit cards, but in the way at which the payment structure is being moved,
Hello.
to have it generated dynamically rather than have like a static system.
Okay. Great. Thank you, Harsh, for sharing those insights and on the debt financing that happened. Thank you so much for sharing that as well with the speakers and the audience. Tushar, I'd like to ask you next about KYC. KYC, something has evolved, I think, a lot. Back in the days, we used to go to the banks physically, submit the documents, right? And to open an account. Then obviously on the phone, we've done KYC as well. now we have these digital banks or exchanges, which is purely digital, and the KYC is purely digital. Like I open an account with an exchange, like La Token, I have to give my ID, my passport, my photo. That's it. They verify that. They link it to my ID with the government, Singapore government, and I'm all set. So let's talk about the fintech and the KYC, how they're coming together. Let's talk. Let's hear it from you in terms of India perspective first, and the banking, how they're disrupting the banking sector. You are mute. You're on mute.
Yeah, thanks, Sunny, for this question. So Aadhaar came, which is a biometric enabled unique card for each individual. If you look at a little bit in the past, there was a very successful movement, a community-based cooperative movement called Amul, where a lot of villagers pooled milk and it was distributed as a properly packaged and properly positioned market product, and India became the #1 producer of milk in the world.
Right.
So at those times, there is a community-based approach that if somebody is naming and shaming a person who hasn't paid back his loan, then it's a big thing, and that is why we had some problems also when microfinance started in India, and we had some some problems there. But now with the coming of Aadhaar, uh, all the know your customer KYC, it's very seamless. You just take the Aadhaar card, scan it, put the numbers, put the thumbprint, and then it's very seamless. It happens on an app, and most of the companies have adopted Aadhaar to do the know your customer, and in fact. It's becoming so seamless that within 15 minutes you can get a new mobile phone. Within 15 minutes you can use any service or a product. And I feel that within microfinance it has a great use, because these people are typically taking very small credit, and they reside in far-flung areas, and so they can be reached through a mobile phone, through the use of technology. And so we have companies like Capital First, RappiPay, we have Loan Simple, we have NetPesa. So these are very small fintech companies which are trying to do the microfinance thing using technology, and seeing a lot of traction and good results. Even like if you consider Grameen Bank of Bangladesh, they have lent to 7 million poor Bangladeshi women, and so that creates a ripple effect in the in the purchasing powers, and the uh, the consumerism increases, so it has a very positive effect there.
Yeah.
And
Yeah.
I missed out
Yes.
on one thing, I'm sorry.
Sure.
So if you look at the recent IPO which was happening of Jack Ma's Alibaba Group, um, they have lent to 1/3 of Chinese population using technology. Seamless lending. You just put in your KYC, ask for the amount you want, and you get it in your bank account. Their valuation was $3 trillion, and so this is the kind of business and value which can be created by using technology in this space. Sorry to interrupt you there.
No, I know, and finance. Thank you so much. Karthik, over to you, please. Fintech, digital KYC, disrupting banks. Over to you.
So KYC has three large components. One is first identifying your customer. Knowing your customer means identify your customer, do a due diligence on that guy, and then continuously monitor. Why did this come in? This came in primarily because of a lot of Mexican frauds that were happening globally, and then that became a norm in the industry. Now, subcontinent, if I were to focus, or Middle East, KYC norms are linked to everything around either my Emirates ID or my social security number. But if I were to go into an underdeveloping or a developing country, most of the banks are able to get the first pillar right, which means know your customers. You would have people writing to you every day about give me your credit card, give me your PAN card, give me your Aadhaar card, give me your your passport copy. But then they forget the most important part of it, which is to do the due diligence. Globally, along with identify your customer, there are agencies that do due diligence. The moment you have a social security number pegged in, It is pegged to 16 to 18 different regulatory authorities, which give you
Yeah.
history about banking, gives you history about criminal record, gives you history about social, about your fines, about your travel, about your purchases, etc., including your taxes. In
Yeah.
India, while banks collect all the KYC, they are still not digitally seamlessly integrated across the body, and which is where the challenge is. So, what social biometrics has become a norm these days, social crawls, which not only give you an idea about what the person's current status is, but continuously monitors and upgrades the risk levels or risk settings for a particular customer, primarily in terms of his ability to prepay, ability to lend, or even creating collusive collection efforts on a customer's account, is one trend that one needs to be looking at. And social diligence and social barometrics is becoming a very strong norm in the KYC industry. More importantly, globally, there are large powers and large businesses like Me Too or Yellow Messenger or etc., which continuously monitor your KYC status, which primarily gathers information from all the regulatory sources and creates I wouldn't say a blockchain, but creates a e-wallet or a digital identity for you, which banks use or financial institutions use to continuously assess your risk as a particular client, which is not what we see in certain parts of the world. Middle East, primarily because of the Etihad Bureau or with governmental regulations, has had multiple startups as well as multiple, I would say, bodies of financial institutions that have been active in this space. I don't know much about India. In terms of startup and investments, we see a lot of startups in this intermediary stage, which is the monitoring space, which starts to collect through either crawls or through apps or even through digital identifiers or credentials. They start collecting different sources of information and try creating an identity for a bank. A bank typically buys these identities, bases a particular reckoner from a supplier. So let's say if I'm a digital supplier, KYC supplier, or a monitor, a bank would tell me for every customer, I'm going to pay you $1 for a 3-month screen. I'll give you a $1.50 for a 6-month screen. And then there are intermediaries where the risk assessment bodies come in. A risk assessment and an insurance portfolio securitizer comes in as an intermediary. So it is a 3-layered structure.
Right.
Digital KYC is big, but associated industries are much bigger, and that is where the action is happening. If you see banking bodies in Singapore, Temasek is one of the largest in this space.
Yeah. So I think banks used to do this historically. So you think that fintechs, I mean, the KYC provider, the external provider, and this insurance startup are going to take over all that?
I don't think they would take over. A bank wouldn't trust anybody from anybody outside. A bank would want to be very, very sure. But what startups would give them a medium, an aggregator platform that allows them to do this seamlessly. How banks have today bought Finacle or any of these solutions to make their works easier is the way they would buy these technology solutions on a pay-per-use basis, a SaaS basis, to make sure that they get the desired results. They might at the end deploy their own people to do the entire screening and evaluation. They would always keep the risk mitigation matrix with themselves because that is where the core of the banking lies. But they would put matrices or they would put identifiers to go out and collect information on their behalf.
Right,
So digitize what government has done is privatized a lot of these functionalities, is what banks would do with a lot of technology service providers.
Right, right. Got it. Thank you, Karthik. Thanks for that. Harsh, your insights, please.
Hi. So regarding KYC, Karthik definitely added a lot of great insights in terms of the degree of KYC and the level of due diligence, etc. Obviously, that is something for us to aspire to in India, where we are still at the earlier stages, right? However, even in the current stages of the KYC, I like to highlight a specific benefit of the current state of affairs, right? So when the COVID lockdowns were announced, Modi government, what they did was they, with the help of the Jan Dhan accounts, they were directly depositing money into the banks of each and every all of those Jan Dhan account players who were at an extremely lower economic strata, right? So they used to deposit 2,000 rupees, 3,000 rupees, 6,000 rupees. I personally know several people who have received up to 25 and 30,000 rupees over the last 6 months. So with this number amount may not seem much, but at least at the earlier stages, they it was enough for at least for the people to survive, right? So otherwise, what would have happened was instead of the COVID, starvation would have been a bigger problem in India without that money. And that thing was only possible because of the Jan Dhan accounts and the KYC which is currently being done. That is the power of KYC, right? So obviously the solution which Karthik was mentioning is that's going to be absolutely important, especially for the slightly higher economic strata. But right now in the middle and the lower economic strata where we are still trying to penetrate the banking as much as possible, this basic KYC goes a long way. So what is happening is there are a couple of startups who are working in the purely this KYC space, right? What
Yeah.
happens is each and every bank, they have their own KYC protocols, as he was pointing out. One bank would not trust another bank or any third party agency. So each and every bank has a separate kind of protocols, right? What these guys are doing is they are providing the exact technologies for the company so that the KYC is taken care of easily, completely in a complete SaaS format to simplify the KYC process. They have an access to the government repository of the entire data.
Yeah. Harsh, you there? So is it me or is it,
So that is
have I
how the
lost?
startups are. And
Sorry.
it's
Yeah,
a
it,
really
it, it
interesting
had
topic.
got it had got
Sorry,
stuck.
carry
As
on.
I was
Carry on. We lost you for a bit.
Okay. So there were a couple, as I was mentioning, there are a couple of startups who are operating in the SaaS space who are simplifying the KYC process and they are aggregating the KYC information, right? So what happens is instead of each bank having to do its own KYC, they act as a central KYC space and the different banks can simply access that information for them. So these are some of
I,
the interesting innovations which are happening in the KYC space right now.
and what kind of investments are going into this space? Like, you recently invested into or planning to invest into one of this space, into this one
We
of the
haven't
startup in this space?
in the KYC startup, we haven't invested yet, but we have invested in a lot of lending companies. For example, Loan Adda was one of our portfolio companies which we had invested in. Right now, there's another company in the pipeline. I cannot take the name. We'll be
Right,
launching
right,
the mandate in about a month or two. So that also we are working on. It's primarily into medical device and medical financing space. So we'll
right.
be launching that next month. So fintech is a very exciting space, and we are definitely looking to work with more and more fintech players.
Awesome. Thank you, Harsh.
We had a very
Really,
interesting investment, Sony, that I wanted to talk about in this space.
sure. Please.
Banks in certain parts of the world, not in the Middle East, but banks in certain parts of the world are mandated and are slowly moving away from quantitative evaluation or scoring methods on risk to a lot of qualitative evaluation matrices, which is where social barometrics comes into picture. We have invested in Norway, Sweden, and Finland in a startup that necessarily collected the Scandinavian social barometrics and created a risk profiling from 0 to 14 for
Mhm.
banks to incorporate into the KYC and into the risk funding pattern. At the moment, the startup has been successful in terms of reaching out to or working with 12 banks out of the 45 odd banking bodies. And of the total population, I think 1/6 or 1/5 of the population has already been screened through it. So it's become a digital platform which allows people to seamlessly work with a banking body through a scoring and a social barometrics platform. And that's where the example of $1 a customer or $1 an applicant comes in. So the startup charges a euro per customer in terms of his digital identity, a social identity. A social
So,
identity talks about the time, the effort, the contacts, the reference list, risk profile of the reference list. It goes, and that's where a lot of artificial intelligence comes into play in trying to figure out a reference of a reference, which is the neural networks that come into play.
so they are not KYC provider per se. So
No,
they are.
we wouldn't want to. Nobody would outsource a KYC provider, but what would be outsourced is the component of a KYC provider. So when I need to do a know your customer. So for example, if I build a Sony Mohanty profile, a Sony
Yeah,
Mohanty profile would have a passport, her user ID, her social security number, any
yeah,
of her age and address identification. But that is a quantitative evaluation. That only gives me your past. Your social barometrics gives me your indication of your mindset and your future behavioral tendencies, which
ah,
is where which is
yeah,
where banks are moving away from how you defrauded, if at all you defrauded and defaulted on a loan, is your past. But your
yeah,
current engagement and the people with which on the quantum of communications you are doing and your
right,
social ecosystem helps me predict how much are you going to default in future, if at all are you going to default in future. Do you have any flagged identities on your social network? Are you into any flagged communication in your social network? Are you showing a level of stress in your social communication?
right.
Those algorithms make it very clear for a bank to determine, are you a high risk customer or a low risk customer? That's how
I
your
should be
social profile
updating my
is.
status on Facebook or Instagram for that matter.
That necessarily means that you should be hanging out with me a lot on the social media. I am a low risk customer for a lot of banks.
Or I should be visiting all the posh, expensive places.
Yeah, I should be talking good on social media. Only good. The world is a
Only
beautiful
good.
place.
Okay,
I
great.
have one question I want to ask. I have one question I want to ask Karthik. Don't you think that's
Yeah.
a bit too creepy and invasive to kind of get into that kind of a monitoring and future anticipation of the
So
customers?
you know what is creepy for me? What is creepy for me is when I tell my wife in the evening sometimes that I need to see Head and Shoulders, and then I need to buy the new shampoo. I need to a new bottle of shampoo. I go into Google. The first ad they show me is Head and Shoulders unknown. Google spies on me every day. So if I allow Google to spy on me, I'm happy that somebody spies on me and at least lends me money by knowing me. If
No, but
people
at least
lend me
Google,
by knowing me, I'm happy.
So
but at
Karthik,
least
when you
Google doesn't charge you.
installed an
That's for
app,
free. The other one is for free. Google is for free. The banks are going to charge you for that.
So Google not only captures my Head and Shoulder conversations, it also captures a lot of other information that I talk. And tomorrow,
No,
necessarily, if I shout at
I'm
my daughter,
familiar.
I'm sure Google is going to make me a high risk customer.
Right, right.
Yeah.
Probably flag you as a not good parent. Who knows?
And if
A hostile parent.
if they can ban the US president, if they can ban the president of the US, where are we in the value chain?
So
I
we
mean,
were talking to one of these days, we were talking to Gary, and I remember in one of these conversations, I was talking to a company called Locatium, and a very, very interesting conversation which works on geolocational placing and working with, I think, 50, 60 different integrators. It has reached, I mean, it hasn't got a GDPR clearance yet. But if
yeah.
it gets a GDPR clearance, it would necessarily be able to tell me where did I fuel my car last week, how much did I speak on the telephone, how many times did I eat pizza, who's my favorite doctor, which movie all do I go often, and what clothes do I buy. So that's already, if GDPR compliances are allowing those information, the world has already moved there.
so Karthik, you would have heard of DOH, digital out of home. So if you are standing in a mall and there are 5 people there, all 5 are on their mobile. So the screen will show you the advertisement as per the 5 people's choices, and you won't even know why that advertisement is being shown to you.
So,
It's like that
so I'm
movie, The
happy.
Matrix.
I'm happy for the world to know my data. There's nothing much that I have to hide from anybody.
Yeah, that's when same goes with me. But how these 5 phones are sharing data with each other?
It's
Tushar, in a mall.
geolocation.
So
Oh,
when you install an app, then
yeah.
it gives you certain terms and conditions. You just press OK without reading it. You can't even challenge it. So everybody presses OK, so they have the legal right of knowing your data.
Wow, that's interesting. Who's still on WhatsApp and who's still moving to Signal? I mean, I just see it everywhere.
I've definitely started moving to Signal. I'm trying to get people to move over there, but people are still very reluctant to move. They don't understand
La
what's
Token
exactly
should move
happening.
to Signal. We will all be on Signal then.
Okay,
Absolutely.
right.
Lovely, lovely. I think we had a
Lovely.
very interesting discussion today.
Yeah, very interesting. Thank you so much. It brings us to the end of the show. I didn't feel like I was actually moderating a show today. And it's a great feeling, to be honest. Thank you so much. Let's take some closing remarks. I'd like to start with Karthik.
Very excited about the industry, primarily because the technology is playing. Otherwise, finance is a very boring space. But when technology does its wonder and brings the lender and the borrower close together and makes the transaction seamless and easy, I think that's where the dollar is going to be parked, and that's where a lot of dollars coming in from as well. So
Right.
yeah, very, very bullish about it.
Thank you so much, Karthik. I've just got a heads up that the streaming is going to get over in 2 minutes. So quickly, Tushar, over to you with your closing remarks.
So there are portents of things to come, like fintech company buying a regulated bank, and the share of private banking in India going from 30 to 50%. Then banks, instead of lending directly, they are preferring to lend to fintech companies because the customer is in the hands of the fintech company. That's the power of the tech platform. So all these are portents of things to come. Fintech will remain very strong because lending as a business will remain strong,
Yeah.
given the way things are.
Absolutely. Very interesting future ahead. for fintech startups. Thank you so much. Harsh, over to you, please.
Yeah, thank you. Fintech is definitely a huge space, right? You see some of these companies like PayPal who are actually valued higher than most of the banks out there. The banks have been traditionally a very non-innovative and a very slow-moving industries, and you have these fintech companies completely revolutionizing how the banking system operates, right? That is
Yeah.
why the fintech space is really exciting, and the kind of companies which are there, even the traditional banking B2B lending processes, even they are being turned into online with the help of these fintech companies, where they are doing these B2B lending, bank guarantees, credit lending, etc. The entire digital verification, everything is done through these fintech companies completely digitally. So it was a high time when these banks kind of, were kind of shaken into trying something new and innovative. So that is why I'm extremely bullish on this space and looking to see more and more innovation happening over here.
Fantastic. Great. Thank you so much, all three of you, Tushar, Karthik, Harsh, for sharing those great insights. The future for fintech startups look bright, and so are the investors in this space. So I'm back tomorrow with another set of speakers and topic. Tomorrow we're going to talk about work tech, remote tech, how to thrive in this mixed reality, which is work and life environment. We are just working from home and also thriving from home. So yeah, till then, keep watching VCTV and stay connected, stay safe, and I'll see you tomorrow. Bye bye.
Take care. Thank you so much.